so are the frontline indices. So let's get in the first management that we've lined up for you on the show. We have the management of Technocraft Industries. Remember, the company recently commissioned its production at 2 new facilities catering to both the aluminum fabrication and the manufacturing of greige yarn as well. So to understand how this will aid their business, what this does to the company's plans going forward, we have Sharad Saraf, who is the chairman and managing director at the company, joining in. Thanks a lot, Mr. Saraf, for joining in. Let's start with the recent news flow that came by itself. Your commencement of production in your scaffoldings division that will increase the capacity by about 600,000 square meters. And the other one, wholly owned subsidiary which has commenced production of greige yarn in Amravati. Both these units, what do you expect their initial capacity to be, capacity ramp up that is? And what could the addition to your revenues and margins be because of this?
The greige yarn production in Amravati, actually, that is a replacement. We have shut down the yarn mill in Murbad near Mumbai because of it being extremely expensive, and we were continuously making losses there. So it's a kind of a re-engineering. So we put up a new state-of-the-art yarn mill in Amravati, which is a heart of cotton growing area in Vidarbha, Maharashtra. And because of the upgraded machinery, the state-of-art machinery, we expect at least 10 to 12 rupees a kilo cheaper yarn. And also there is the advantage of electricity cost there. There's a differential of about 2.5 to 3 rupees per unit. That would translate to at least 50 lakh rupees a month of saving in electricity itself. So it's a big saving, and this is also our experience from the first mill that we were operating in Amravati. So now we had 30,000 spindles there. So now we have 60,000 spindles, and earlier in Murbad we had 60,000 spindles. So this is a kind of a replacement, but with profitability.
So electricity is the only savings? You said there was 12 rupees, per unit of...
Yes, 12 rupees for the technology difference.
Okay.
Because
so,
we are now having a...
How much does that account for in terms of overall savings?
Overall saving would be at least 15-16 rupees a kilo of yarn.
And absolute terms, sir, like how you gave us that for electricity, you'll save around 50 lakhs per month.
Yeah.
Because of this technology that you're talking about, how much will you save because of this?
Another 40-50 lakhs.
So around a crore of savings.
Yeah, overall saving, overall improvement in our bottom line could be 10 to 12 crores.
10 to 12 crores. Got that. All right.
Which at the moment is a loss. So, it's we will stop the loss and come to a profitable situation.
Lovely. So the yarn business will turn around then, and that's what you're trying to tell us.
Yes, absolutely.
Got it. Let's focus on the larger part of your business then, the scaffoldings business. Tell us what kind of utilization...
Now, coming to scaffolding, what we are going to do in Amravati, on Aurangabad, is produce formwork, aluminium formwork. So we plan to produce state-of-art aluminium formwork, which is used in all the infrastructure projects, high-rise buildings, and wherever very high quality construction is required. So if you use aluminium formwork, then the finish is so good that you don't really have to do any subsequent plastering or finishing work. You can straight away paint. And now these days you can see in many places in Mumbai where the construction are going on, the new high-rise buildings are all having this aluminium formwork. So there is a very good demand for this kind of formwork. So it's not really scaffolding. You see, there's a difference between scaffolding and formwork. Scaffolding is where the worker stands and works. Formwork is like a skin where you pour the concrete. So all the metro, for example, construction all over India, they use our formwork.
So how much does this plant expect? I mean, how much are you expecting this plant to generate in terms of revenue? Initial years, the capacity ramp up will be slower, right?
Yeah, in terms of revenue, anywhere between 800 to 1,000 crores. Probably 800,000 crores. But I'm just saying that being the first year of operation, it could be 800 crores.
So you're saying this expansion itself will contribute 800 to 1,000 crores?
This is a greenfield expansion completely.
Got it.
It
And
has
as of
nothing to do
now,
with our existing production.
as of now, sir, your scaffolding business, if I look at the last quarter, it's contributing close to around 230 crores approximately, 230 to 50 crores on an average on a quarterly basis.
Yes.
So you're saying that the scaffolding business, effectively, the potential of the revenue doubles?
Correct. Because two things are happening. One is this formwork is going to be made from aluminium, which is significantly, which is about 3-4 times more expensive than steel. And secondly, it's a more expensive product. So, our top line would be very high.
So we have addressed both the issues. One is the textile business turns profitable because of these changes. And the scaffolding business, the revenue is nearly doubles, the revenue potential. But on whatever base you deliver for FY24, what kind of a growth will you look at from the scaffolding business? And if you could tell us the rough areas of growth that you're looking at?
Scaffolding business, as I said, the top line will almost double.
Right. So that is the potential, right? That is the potential.
That's the potential.
What can you deliver? What is the what can you deliver?
First year will increase it by at least 75%.
75%.
Okay. So that's about
all the equipment is there already, and trial productions have started. So we expect to be full steam in production in April itself.
So this 800 to 1,000 crore that you're talking about is at full scale, at full capacity, right?
Correct. At full capacity.
So that one presumes could be towards the end of FY25, the first half of 25.
No, middle of FY, because end of FY.
Okay. So this year itself, in FY25 itself, you can do about 800 crores, and thereafter 1,000 crore consistently is what you can do.
Correct.
And how are the margins for this business? You said aluminium products are 4 to 5 times more expensive than all the other products that you're making. But do you earn 4 to 5 times more as well in this?
Yeah, no, not 4 to 5 times, but at least we can expect about double margin.
How much?
Twice of what we do now. So you have about 200 crores now, it can easily become 400 crores.
Okay.
All right. Let's talk about the other part of your business then, the drum closure business. That was affected due to lower demand, I understand.
Yes, because we are suffering.
So has demand picked up? And what kind of a growth can you estimate from here?
No, not yet.
Demand has not picked up.
No.
Got it.
Because this is the effect of the war. Unless the Russia war stops and Europe starts picking up, it's very difficult, because Europe was a very big market for us.
As a consolidated entity, what kind of a revenue growth should we look at for the company on the whole, sir? And also, what kind of a rough margin band we should be looking at because of the cost saving in textile, better margins in this aluminium business, as well as the drum closure business, which is still struggling?
You see, with the present geopolitical fluid situation, it's very difficult to predict anything very accurately. All we can do is assuming status quo. Now, see, for example, this Red Sea thing which has happened now is eroding our crop. Now, supposing something like that happens again somewhere else in the world, we will have a problem again. So, it's very difficult to predict that way. But we expect to add at least 1,000 crores of top line, because even in yarn, there is little bit of improvement in the market. The prices are a little bit improving. So we can expect 1,000 crores additional revenue, if assuming everything remains as on date now. And we can expect our bottom line to almost double.
All right. So bottom line looks like around 500 crores by FY25, assuming that you do 250 crores in FY24. And close to around 3,000 crores on the top line. All these points are well taken. And finally, before we let you go, Mr. Saraf, if you could give us a sense of the update on the demerger of the textile business. I remember you had said that you are considering restructuring there. Now with this yarn business turning profitable, prospects of higher value unlocking post demerger increase, right? What's the timeline for that?
Yes, it could happen. And in fact, we were delaying because of this only. Because we wanted to make it profitable and then look at demerging it. We are open for demerger. And if we have a good opportunity, we will. But it is not going to be a distress sale. It's not something that we would just like to get rid of at any cost.
But you
That is
can
not the
separate
issue,
it at
because
least.
it's going to be profitable anyway.
Mr. Saraf, but you can separate it at least. No? That could unlock value according to you.
Not really.
Because if someone wants to invest in the scaffolding business, which has great potential, then they can invest there. If someone wants to invest in the textile business, which is turning around, then they can invest there. Do you see that rational, or for the time being, you want to keep the businesses together?
No, at the moment, we want to keep the businesses together until we see some good valuation or some good prospects.
So basically, by prospects, you mean you are looking to sell this business as soon as you get good price, right?
Well, that way everything is sellable in life or in the world.
No, I mean, you are saying you're looking at prospects and not open to demerger.
There is no, at the moment, there is no such plan.
There's no such plan. But if you get a good enough big check and they say, Mr. Saraf, this is what I want to pay you, and it matches your expectation, then you'll say
Yes.
you're a ready seller?
Could happen, can happen.
Okay.
We'll discuss it internally.
After you'll do that, we'll invite you back on the show, sir. Once you do that internally, we'll be happy to have you on the show. But we appreciate you joining in. Thanks so much for stopping here and speaking to us here on CNBC TV18. For the time being, we slip into that short break. Come back, continue focus on markets.